Please welcome Dr. Ma Jun.
Thank you very much. It's my great pleasure to present to this very distinguished audience organized by PRI. I think the conference on responsible investment is very timely, given that just a few days ago the G20 summit concluded in Hangzhou, and for the first time in history, the G20 communique stated that it's necessary to scale up green financing, and also the communique stated that they welcome the voluntary options developed by the G20 Green Finance Study Group on enhancing the ability of the global financial system to mobilize private capital for green investment. And in fact, the communique also had a lot of details in terms of the challenges that are facing green financing development, and also the 7 specific options which were proposed by the Green Finance Study Group. Last few days we were busy in Hangzhou and Shanghai. That's why I'm not able to come in person to attend this conference. But just in Shanghai yesterday, we had a conference on green finance with 300 people attended. And in fact, Sagarika from a PRI was here in Shanghai, and I think she flew over to Singapore midnight last night. You can see the momentum is building up very rapidly. As I said, 300 people in Shanghai yesterday on green finance, and now I heard 600 people in Singapore on responsible investment. I'd like to take this opportunity to briefly touch upon 3 issues. One is what the chairman were talking about China green financial system, and secondly, the specifics on the G20 Green Finance Study Group, which came out with 7 options, and I will elaborate on some of these which are relevant to you. And finally, just a few comments on what we should do to promote green investment both in China and the rest of the world, and the potential role that PRI can play in enhancing the ability of the green investment community. Now, starting with China, many years ago we started with efforts in promoting green credit. In 2012, China put out the green credit guideline, and right now about 10% of the Chinese outstanding loans are classified as green. This is a larger number relative to other countries where statistics are available. In fact, there are 2 other countries which produced green credit statistics. That's Brazil and Bangladesh. Brazil has also close to 10%, and Bangladesh has 5%. Recently, we realized that green financing requires the mobilization of money by all financial instruments, including the bond market, the equity market, the fund industry, the insurance industry, as well as the carbon trading system. So we're beginning to build a green financial system. In fact, about 2 years ago, the PBOC created a task force on green finance, which I led, and we produced 14 recommendations. Many of these went into government documents such as 13th Five-Year Plan, and most recently, President Xi Jinping presided over a meeting which approved the guidelines on establishing Chinese green financial system, which now includes 35 action points to be implemented by 7 ministries. And also, this guideline requires all local governments, including 30-something provincial governments, to implement green finance policies in their jurisdictions. Now, within the guidelines, we put out a few, I think, significant incentives. For example, central bank re-lending, which essentially means that central bank can lend cheap money to commercial banks and allow the commercial banks to lend cheaply to green projects. And secondly, we'll be using interest subsidies to promote green financing. For example, the green loans may be subsidized by fiscal money on their interest payments. And also, we have put out the guarantee program in the guideline, which essentially asks the local governments to organize guarantee companies or guarantee programs or guarantee funds to support the green projects so that they can enjoy reduced risk premium and reduced funding cost. In terms of specific financial instruments, as I said, we have been developing green credit. And starting from end of last year, the Chinese green bond market grew very rapidly. In the first 7 months of this year, the total amount of green bonds issued by China, both domestically and overseas, amounted to 120 billion RMB, which is slightly over 18 billion US dollar. That number represents a little more than 40% of the global issuance of green bonds during the same period of time. So clearly now China is the largest green bond market. And beyond that, China is planning to launch a nationwide green development fund, along with many regional development funds, which will provide essentially equity financing for green projects, so that these projects will be able to raise debt financing as well, with enough equity financing. And next year, China will launch the nationwide carbon trading market, which I hope will be covering probably 40% of total carbon emission within the country. Now, moving on to the second topic of the G20 Green Finance Study Group. This is a China proposal to launch the Green Finance Study Group at the end of last year. It was adopted by G20. So from beginning of this year, the study group, which is co-chaired by China and the UK, with UNEP as the secretariat, ran 4 core meetings and also helped organize a lot of private sector events on green finance. By July this year, the study group produced a synthesis report, which is now available publicly. And that report was submitted to the G20 finance ministers and central bank governors meeting in Chengdu in July. And more recently, it was submitted to the Hangzhou summit for the 20 global leaders to consider. And the communique, as I mentioned earlier, came out endorsing this study group report and welcomed the 7 options which are developed by the study group to overcome some of the challenges facing green finance development. Now, let me elaborate a little bit more on the 5 challenges that the study group has identified, and also essentially the name of the 7 options. The first challenge is what we call difficulties in internalizing environmental externality. Now, what does it mean? For economics students, it's easier, but for others, let me give you one example. If you do a green project, for example, a clean energy project, the benefits for the neighborhood is that it's going to reduce air pollution. But many of these people in the neighborhood are not paying for the project. That's why the project's return may be lower than what the market expects. And that's why it's difficult in some cases to attract private investment into these green projects. So in cases like that, we need some incentive from the government. And in the financial space, we were talking about incentives such as the re-lending program and the interest subsidies and guarantees, which can help reduce the funding cost of these green projects and therefore enhancing their ROE so that they can attract private capital. But this is only one case which requires some government support and fiscal money. But there are many other challenges which can be addressed by the financial sector itself or by legal means. For example, the second challenge is what we call mismatch of maturity. In China, the average maturity on the liability side of the banking system is only about 6 months. And that's why banks are unable to provide a lot of medium and long-term loans. And we also know many of the long-term green projects, such as water treatment, solid waste treatment, new energy, subway projects, and so on and so forth, they require very long-term financing. The repayments may be 15 years or 20 years. That's why the mismatch of maturity becomes a constraint for financing the green projects, especially long-term green projects. The solution to that is, one of them is to develop the green bond market so that the long-term financing can be connected directly to the long-term projects. And of course, there are other solutions, for example, yield call, developed in the US for renewable projects, as well as collateralized lending for banks to lend to these long-term projects using the future cash flows from green projects as collateral. The third challenge is about the definition of green. As I said, not many countries actually define green financial operations like green loans or green bonds and green assets and so on and so forth. There are only 3 countries define the green loans, and a lot of banks define their green loans individually. So I was joking with my colleagues, if a few thousand banks have defined green loans in a few thousand different ways, it's very difficult for the industry to communicate. And we also have a problem in the green bond section. Globally, there's a green bond principle, which is observed by many OECD countries and some developing countries. But in many countries which require the development of local green bond market, they also need some local standards and definitions. We need some core sort of elements of definitions which are universal, so different countries can compare and the money can flow from one country to another for green investment. But if there are too many of the different definitions, it could be a problem. The more problematic area is actually definition for other green assets. There's no well-accepted definition of green equities or green investment funds. So these become a challenge which will increase the search cost for investors and needs to be addressed by better definition. The fourth challenge is what we call asymmetric information, which essentially means that green investors are willing to invest in green projects, but it's very hard for them to find the green investments, green investment opportunities, as the projects or the companies are not disclosing information enough to the investors. If the projects or companies are not telling the investors how much CO2 emission I'm generating, how much SO2 or NOx, and how much wastewater I'm emitting, it's very hard for the investors to gauge the greenness of the green projects or green companies. So the solution to that is better disclosure. For example, the 20-something stock exchange, which now introduced disclosure requirements for listed companies, but unfortunately, most of them are still voluntary. There are only a few countries or few markets introduced mandatory or semi-mandatory requirements. In China, in the recent guideline that's published, we stated clearly China is moving towards a mandatory disclosure requirement for listed companies and for bond issuers. And the fifth challenge is what we call capacity, a lack of capacity in analyzing financial risks arising from environmental factors. What does it mean? It means that many institutional investors and banks are probably unaware of the impact of the environmental exposure on their future operations, including on the financial risk and market risk that they're facing. For example, if we invest in some of the carbon-intensive assets, some of them may become stranded assets. This is a study that's shown by Bank of England on the impact of climate change on insurance. And also, if you're a bank, you may not be aware that in lending to polluting sectors may end up with high NPL for you. And this is an exercise which is recently done by ICBC, the largest bank in China, which built a model linking the exposure to polluting sectors and the future NPLs quantitatively. So solutions are available. I think the issue is how to increase the dissemination of these tools and increase capacity building among the financial players. Now, moving on to the 7 options which were proposed by the Green Finance Study Group. Now, these are, number 1, developing clearer policy signals for green investment. I think by far the most important signal that we received recently is the Paris Agreement. But if each country is able to translate the Paris Agreement into roadmaps within the country implementing their commitments, I think it will be a much stronger signal for the private sector, including institutional investors, to make green investments. And the second option is promoting the adoption of voluntary principles on green financing. There are lots of principles, one of which is the equator principle for the banks, and the other one, important one, is the principle of responsible investment, which I think should be promoted for wider adoption by more institutional investors globally. And the third option is on expanding the capacity building platforms. And specifically, the study group mentioned 2 platforms which are already there. One of them is Sustainable Banking Network that's organized by the IFC, which trains the bank regulators on how to develop environmental risk management principles locally. And the second platform is a PRI, which now has 1,000 institutional investors and members, but I think the scope and coverage of PRI can also be expanded significantly going forward. And the fourth option is to develop local currency green bond market. As I mentioned briefly, there is a global interconnected green bond market, which is largely following the green bond principle, but in many countries like China, India, Brazil, Indonesia, and so on and so forth, they may need local currency green bond markets, partly because some of their capital accounts controls are still in place, and the other part of the reason is that many of these countries have somewhat different priorities for the environmental agenda compared with OECD countries. So for these countries, it's necessary to enhance the ability to design green definitions, to develop the disclosure requirements, and to increase their capacity for conduct third-party verification for the green bond market. And the fourth option is regarding promotion of a cross-border green investment, and specifically on the green bond market. Now, let me just give you one example why this is needed. China is going to have something like $600 billion green investment demand every year. So there'll be lots of green projects, a lot of green assets, including bonds and green equities. But Europe has a lot of green money. I heard from some European colleagues saying that 20% of institutional investors in Europe are already green. So they're actually looking for green assets in other places to invest. If we can build a connection and make it much more convenient for foreign investors to invest in green assets in emerging market economies, that's going to facilitate the level of green investment on the global level. And the fifth option is on introducing more opportunities for dialogue on environmental risk management. What does it mean? It actually basically refers to the cases I mentioned, like Bank of England doing a study on how climate change may be impacting the insurance sectors, and ICBC working on the impact of exposure to polluting sectors on their credit risk. And many others, for example, GIZ, were doing studies on how water scarcity can affect the default rates of bonds. So these analyses, I think, needs to be further developed and promoted to wider usage by financial institutions, so that these institutions will be aware that climate and environmental exposure can be leading to financial risks that they face, and therefore they will be shifting the assets more towards greener classes and away from the polluting sectors. The final option developed by the study group is on improving the measurement of green finance activities and measurement of the impact of green finance activities. And this is addressing the definition problem and partly to address the information disclosure problem. By doing better on the measurement and indicators for these green finance activities, it's going to be possible for countries and for companies and for banks to compare their performance and to design incentives for better green activities. Now, moving on to my final topic on what we should do to promote green investment and potentially the role can be played by PRI. From the China experience that I had in engaging with the green investments communities, I see actually 5 problems which stand in the way of wider adoption of green investment principles. One of them is the lack of awareness. Still, a lot of insurance companies and mutual funds and pension fund managers are not fully aware that green investment is the direction to go, and there is a principle, which is the principle of responsible investment, available. And the second problem is the lack of information, which we mentioned earlier as part of the identification by the study group. Essentially has to do with listed companies and bond issuers not releasing enough information on the environmental performance. And the third problem is the lack of products. I heard Europe has a lot of green ETFs. Someone from Amundi was telling me that 20% of the ETFs in the US are already green, but in China it's only 1 or 2% for now, although the numbers of green indices and green ETFs are rising quickly, but we start with a very small base. And the fourth problem is the lack of analytical capacity. For example, a lot of investors are still unable to quantify the greenness of the investment objects, including the stocks and the mutual fund products that they're buying. So someone has to do this, ranking the carbon footprint or environmental footprint of the investment products or assets. And finally, the lack of social pressure. Still, I think the final investors, whether individuals or pension money owners, are not putting enough pressure on the institutional investors to be more engaged in green investors. So what are solutions? I can think about the following few options, one of which is stronger policy signal. And we now have quite a few signals from Paris Agreement, from the G20, and also from the Chinese guidelines on establishing green financial system. It's a matter for the industry to translate it into more specific signals for asset managers to follow. And the second thing is about improving disclosure, which means that we need to implement the guideline requirement in China, mandatory requiring listed companies and bond issuers to disclose better information, including the specific information on emissions, like CO2, NOx, waste, water discharge, and so on and so forth, not just the general information I'm doing well on green investments. And the third thing to do is to develop more products, such as the green indices and various fund products based on the green bond index and based on the green equity indices. And number 4 is about the tools that should be made available to institutional investors so that they're able to measure and quantify the environmental benefits and costs of their investments. Recently, the Green Finance Committee, which I lead, has produced a tool not so much for asset managers, but for banks and other investors which are launching new projects. And this tool, which is now available on the website of the Green Finance Committee, enables investors to quantify the environmental benefits in terms of a number of tons of CO2 reduction, number of tons of SO2 reduction, and the amount of energy saving or the amount of water saving that could be achieved by this specific project. I think similar tools need to be made available to institutional investors to quantify these benefits from the portfolios that you are holding. And finally, I think we need to improve the transparency of the asset managers themselves so that your investors will know how much green assets you're holding and how much efforts you're making in enhancing the greenness of your portfolio. So in many of these areas, I think PRI can play a significant role. I heard PRI has a significant operation already in Europe and US, but still relatively light in Asia and Latin American countries. So I'm hopeful that the future expansion of PRI can have more aggressive coverage in China, in India, in other South Asian countries, and in Latin American countries. And the G20 study group will be happy to continue to provide support for the expansion. To conclude, I think there's tremendous scope for scaling up green financing and green investment. A lot of institutions, including the World Bank, UNCTAD, and OECD, have done some estimates on the amount of green investment that's needed globally, and the numbers range anywhere between 5 trillion to 7 trillion US dollar globally. But still, a very few percent of the global assets are allocated to green investments. But fortunately, I think policy environment is rapidly improving. As I mentioned, we had the Paris Agreement, and in fact, China and the US just signed off the Paris Agreement from a parliamentary. Also, G20 issued the strong signal on supporting green investment. And at country level, we now have a few countries, including China, France, and others, leading the charge on putting out policies and regulations to promote green financing. And I'm also hearing that Indonesia is planning to introduce something like a comprehensive policy package for green investment. So for green investors like you, I think it's a good time to increase your capacity for green investment and to put more pressure on the portfolio company that you're holding for them to become greener, and to urge your governments to put more policies to support green investment. With that, I would like to thank you very much again for giving me the opportunity to speak, and I wish the conference a great success.